Okay. Good morning, good afternoon, good evening. Monday, the 20th of October. Uh, Getting close to November, getting close to Christmas. Actually, Halloween quite soon, so. Yeah, let's start with long to short ratio. Coming down very, very, very heavily on the long to short ratio. We hit a high of 70%. That was 3 days ago, so Friday. We hit a high of 70%, which usually is around where the long to short ratio does start to reverse. 70% either side is very, very big. Since then, we've fallen all the way to 63.4%. So, of course, overall, still more longs in the market, which is generally a little bit more bearish. But, well, let's not say bearish, let's say downish. But yeah, this is relatively quite good, especially if we want to see a bit of a bounce, is that shorts are re-entering back into the market here as we do come up towards the Q4 level, which is going to be heavy resistance. Yeah, you can see this on the chart. Let's just put that at the top. Retail traders and top traders are pretty much the same. I'm not really sure if top traders is that reliable, to be honest, but yeah, we've hit a major high at the bottom, which is a little bit strange, but yeah, we are coming back down, and yeah, it looks relatively decent for some sort of bounce, but I don't think this is by any means like trend changing stuff, to be honest. In terms of liquidations, let's just have a look. Yeah, we got some pretty heavy stuff above us. We do have a little bit of a gap, about 113.5, and then another gap about 117.7. Apart from that, we've got a lot of short liquidations above us that we did build all the way as we were falling back down towards the levels that we just fell to. And yeah, there was a big hotspot just above sort of like 115, 115.9, 116. There's a bit of a hotspot there in terms of short liquidations. So yeah, definitely keep an eye out for that sort of stuff. Let's just go to the 1 month and just see if there's anything a little bit more. No, apart from that, yeah, just got a lot of stuff to rip. And the order book, CoinGlass order book is, I'm not really sure how reliable it is. I think it is quite similar to Kiyotaka, which is why I just continue to use it because of this node. But yeah, we are on a 1 hour volume node at the moment. So yeah, we have one below us at 106.9, which we have now basically bullishly back tested. We just don't want to lose this swing that we just put in around like 108. If we lose that, it'll start to look really bad. But yeah, we have started to locally gain some levels and start to trend a little bit higher. This is going to be a big one as well around here at 111.5-ish. Apart from that, I should have probably started with this. I mean, I don't really care too much about the economic calendar, but it's obviously just good to go through it and know. I don't think that's anything really particularly important. No one cares about the UK, so yeah. None of this is particularly important. It's probably just minor data. Thursday, usually existing home sales, okay, is relatively big, but I don't think initial jobless claims maybe on Thursday. There's no time set on that because I feel like the government's still shut down. The US government, still something happening with them. So all in all, probably nothing that you really need to pay attention to until Friday, where we have CPI. 1 hour before the market opens. 1 month, one hour before the market opens on Friday. So apart from that, pretty quiet week. Last but not least, in terms of the liquidation max pains, we have long max pain for the month sitting at 105.8. Short max pain sitting at 113.8. So we are about halfway in between both of those. Wait, 108. We must have hit 108 already. for the longs. We're probably still a little bit closer to the longs. Let me just actually check. So where are we now? 113.8. It's about 2.5% pump. 105.8. So we are closer to the shorts. Yeah, we're a bit closer to the shorts at the moment. So that's quite good. Uh, 2-week. Is sitting at 105.8 again, 113. Wait, that's 1 month. 113.8, 104.4. So the 2 weeks actually below the. Oh no, it's changed. Did that just change? Or am I tripping? 105.8. 104.4. Okay, 104.4. 104.3, 103. Okay, so we're quite a lot closer to the short liquidity above us at this moment in time. A lot of this long max pain is just sitting at these wicks. So, yeah. Let's move over to the charts and see what's happening. Long-short ratio is cooked. Waste of brain power to look at these days. Do you really think? I'm kind of still here for it. You know? Everyone this weekend was saying, oh, the long-short ratio, blah, blah, blah. Got the rip up. Yeah, yeah. But I think when you get close to 70% either way, it's just, it's a reversal. Because you can't really have any more long to shorts on either way unless you get a really big capitulation event at that moment in time. Need a heat shake, bullish or bearish. 16 dump it, 6 pump it. Yeah, everyone bullish at the potential local bottom. So I know how in love people have gotten with thinking they can trade against retail, but following the long to short, but the confusion, arguments, the indicators, ads aren't worth it to me, so I'm sorry to trigger anyone when I say that. No, it's not triggering at all. It's actually a very good conversation to have. Is the long to short ratio that accurate anymore? I mean, I don't think it's failed me as of yet. I would just say that sometimes when the majority of the market is one way or another, it doesn't have to go that way. So in this scenario, let me go back to the charts. Let me just switch. Hold on. Because we can actually potentially talk about this and why the long to short ratio isn't actually as good as it used to be, but it still could be used. Is that if the long to short ratio is 70% long down here, and everyone has been longing to the bottom, that just means that there is a lot of long liquidity below this wick, or literally in this area, that hasn't been basically licked, and a lot of long positions entering basically on this dump. And that there will be a lot of like liquidations and liquidity below here where all these wicks are. But since we've been coming down from the all-time high, there's lots of old short liquidations. So I don't know, like it just means that maybe in the general structure we're still in a heavy downtrend, but locally we could see like a rip of the like short liquidity that have like built up here, all the way up here. So there. You know what? Let me just turn on the liquidations so we can see. But maybe it's more for like trending. So if you look at the MDX Algo like charts, we've probably got the flip on the long to short up here, trended all the way down to 70%, where you can't really get higher than 70% long to short, and then got a bounce, which everyone starts to short, and as soon as we get the higher low, everyone just starts to short it all the way up. So I feel like there's an element of what you said, which is right, where we are 70% long down here at the bottom, so you would be expecting not really a bounce there, which is, I think, the outlier. But in general, if we're like seeing a flip on the long to shorts and we're starting to break down levels, it's probably gonna go a lot further that way, to one way or the other. But I kind of hear it. I kind of understand what you mean, and I kind of am like half in agreement, half not. But when you look at all the liquidations, all the levels us only account for 29. So that was actually, that's also my thought process as to why I kind of understand what you're saying a little bit, is because all of this, so all of this, all of this, all of this, all of this surely can't be right, like you said, only 30% of shorts in the market, like only 30%, which would have to mean the volume of longs down here is absolutely just crazy. Oops, let me go back to that. You know what? I need slightly better sensitivity. Maybe like go down a little bit. So yeah. It's an interesting one. Wait, what? I remember long to short ratio was over 79%. No, it hit 70 to 71% on Friday. So basically at the bottom, pretty much. And then we went sideways flat over the weekend. Literally gained one level on Sunday, did a higher close on the hourly, and now we're potentially locally uptrending in the price. So let me just talk about Bitcoin for a bit. I definitely would like to have an ongoing discussion about that long to short ratio. I don't think it's like obsolete as to what you're saying, but I kind of agree to a certain aspect where it's not really as religiously, like, if retail are more long or short, surely the market should go against them. But retail was 70% long at the bottom, and we've seen a little bit of a bounce. So I guess that's the only thing that I would say is an outlier towards it. But anyway, yeah, Bitcoin. So again, we've actually come up quite nicely to this little swing. We've got a decent little daily weekly open. We don't want to lose that swing on the hourly. I'll just go to the hourly and make it a little bit easier. So this one, we don't want to lose now. That little block, which is also here, this here. This is all done. This is all retested down there. Retested the high here last night over here. And so the only thing left to test is basically just this area in there. Apart from that, little bit of a local uptrend, kind of expecting this to maybe head towards 113, 114 in the near term this week. So yeah, looking pretty decent for just a potentially a little bounce up to the Q4 on Bitcoin. Apart from that, yes, we obviously have a lot of liquidations in between this resistance and the Q4 as well. Not really too much in the middle. So in the middle between the highs and that there where I'm talking about. So we might have to build a few more shorts here in the meantime before we rip that. But yeah, I mean, hold daily weekly open, and I don't see why we could go up and rip the 786 at some point, which is still kind of what I was hoping for last week. So I remember last week I was saying that we're just in a bad position in the market in this area, and I kind of want to see the wick filled before I long. I didn't catch any longs in this area. I actually tried to long literally this last night, but they were all on the Q3 where this liquidation pocket is. So I probably literally just got missed on this wick, yeah, on ETH and Bitcoin. But yeah, we were saying that we wanted to see the wick filled, and then potentially we could go all the way for the 786. So I'm still going to stick to that theory that as long as we can hold this swing, this daily weekly open here, there's a good chance that obviously we're going to go for 113, 114, and then potentially all the way up to the 786, which is sitting at 121. But there's not really that much liquidations in the middle of this because we just went straight down here. So there's no volume being built up. So it might take a long while of us, you know, like doing this, and then we'll do that, and then we'll go back down, and, you know, we'll do this, and then we'll do that. You know, it might take a while to build up the liquidity necessary. But doesn't look too bad at all. Doesn't really look that bad. Yeah, you did say Friday in the first place. I thought you meant all over. No, yeah, Friday hit 70%. But the thing is, when we hit 70% on either side, it means either one of two things. It means major capitulation, so like wick out all those positions, or it means we're going to see some sort of reversal in that time. Because I don't know about you guys, but what's the most you've seen the long to short ratio? The most I've seen is probably longs at like 74%. And that was like near a proper top, like in the bull market. I think that was like back near the election, right? I'm not 100% sure, but I think I've seen 74 to 75% longs in the market, and that was definitely an area for reversal. So yeah, 70% or over is just like you're going to see a flip probably quite soon, or a like I said, capitulation. Let me just get some water. Sorry. Suggest that a higher low is required on the 4 hour. Of course. The focus shouldn't be on long short only to counter trade it. First thing is still continuation till the trend change, and that is what I always look at when looking at long to short. Yeah, so also agreement. So like I agree with what Zeus is saying, but I also agree that when you get a flip and a break of structure, that's more your okay, we're changing the trend. Even just a flip, or even just the general tapering of longs and shorts off from a really high point. So if you go and look at the like MDX charts, you'll see that on the hourly, basically since we hit 70% on Friday, shorts have been re-entering over the weekend and longs have been coming down. All-time high on long to short was 84% last bull run on the end of it. Never after we have. Last time we got 78%. Yeah, and shit can just grind up, innit? It can just really grind. Excuse me. Sorry. So yeah, let's I would like to see a close above 111.3, but yeah, apart from that, I wanna hold that big 4 hour candle we just did with the wick down. I wanna hold the base of that, basically around daily weekly in September, where I might be tempted to potentially take a little something. But yeah, doesn't look too bad. Let's have a look at ETH. Let's just take this off for the meantime. Actually, quickly, let's just look at Trendmaster on the 4 hour. Yeah, still looks a little bit rough. ETH. So ETH looks a little bit, dare I say, slightly better. Just because it held this low quite nicely. And in the local stuff, we have done a bit of a gain here, but again, we haven't closed above that high. So still looking a little bit rough, similar to Bitcoin, but yeah, potentially could be like breaking some levels to go a little bit higher. There is a lot of liquidations back at the lows, so around like 3.8. But yeah, we have a lot of stuff like stacked way higher. So yeah, around the Q4, this is a good area, especially similar to Bitcoin. And then we actually have a lot of stuff in place that could take us all the way back up to the highs on ETH in the meantime. So basically all we need to do is just close a candle above here, come up and test the Q4, and then potentially hold the daily weekly open, or even just anything in here we just want to hold. And you could potentially see a little bit higher on this, potentially all the way up to this swing, which is pretty much untested at this moment in time. So yeah, I'm kind of thinking maybe 3 point 4.35 ish on ETH. Potentially that little swing this week for a little bit of a bounce. I think that looks relatively not too bad. Yeah. Interesting. Lots of volume. There's a bit of a volume dead zone though, just before it. So we might have a little bit of a stop off around this high here, 4.2, and then come back down, you know, like do a little bit of messing around in here, and then hopefully we can see a pop to the highs somewhere in there. Yeah, not too bad. I was kind of just waiting for the wick to be filled last week, but yeah, I didn't really long anything Friday into the weekend because I just didn't. I was just having a nice, enjoyable weekend for once. But yeah, if we go to the hourly, we actually have done a candle close above this on the hourly. We haven't done it on the 4 hour yet, but on the hourly, we do have a little bit of uptrending price action. Basically ever since we did these local gains right here. So yeah, not looking too bad for potentially a little bit of up this week, especially if the shorts can start to, you know, come more into the market and the longs keep coming down. But yeah, in general, it still looks a little bit rough, especially if we're looking at like the weekly time frames, where these weekly candles and this weekly oscillator and stuff like that, it's not really giving me a lot of confidence that, you know, we've got loads and loads of pump in this bear market to go. So
what are you saying, brother?
oh, we say Maxi boy. We're just talking about the long to short
Yeah, that's
ratio,
great.
bro. So what you think on the long to short ratio? Because Zeus is expressing
For
some of his
Bitcoin, yeah.
concerns with how the long to short
Ye-
ratio isn't as religiously good to trade on now. Is that I was kind of saying, so basically
Yeah.
when you get like a really big outlier, so like plus 70% on either side, it's more of like a reversal signal rather than or capitulation signal. But the general trend of longs or shorts in the market is still something to keep an eye on. But he's basically saying that it doesn't really matter too much because it's more just about if you do get a flip and the break of structure together, then okay, you could look at it. But we were just 70% long at the bottom and we did get a bit of a bounce. So that's kind of counterintuitive. What are your thoughts?
Yeah, it's the thing is about any indicator, it's not 100% hit rate on anything you're looking at.
Mm.
You have to use it in confluence of the stuff. I'm just saying that it's a pretty powerful one, so it's got a high hit rate.
Mm.
But the way I'm using it, if you go on your screen, I'll show you how I'm using it because
What on the charts
the
on the website one?
can you bring it up on your screen?
Yep.
Can you bring it up on your screen?
Yeah, yeah,
The one which we've got on
yeah,
the
yeah. I got it.
website, brother. The webby,
Got it right here.
the Weberuniente.
There you go.
And then if you go on the hourly, because the hourly is pretty nice. Thank you, brother. Yeah, so not always. Look, people can still be on the right side of the trade because you've still got, even if you have 70% long, you're still 30% short. It's actually how I'm using it. It's just if longs or shorts are rising or falling, right, can actually be a potential signal for what's to come. And I'm actually looking at it as in terms of where the higher low is and when the cross happens.
Mm.
I'm more interested in the cross really of actually when you're going to see something.
Yeah.
And that's what has been working really well. Like usually when you get a cross between shorts and longs, that's when you're actually going to see a change of direction. But people can be really, really long, and then the market can begin to move. But that's the beginning of the move. What usually happens is towards the end of the move, that's when actually people begin to start trying to short into it, and then it keeps pushing higher, 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 higher.
Yeah.
So I think with this move right now, Bitcoin's likely going to see some resistance somewhere. The price is then going to fall, and I actually think the long to short ratio will then come into a cross where we are right now. So they're both. You can already see them beginning to move down and up. So you can see people are beginning to come out of their longs, are beginning to start shorting. So the next move down for Bitcoin will be when everyone on those short sides start thinking, "Oh shit, I've got it right." I would then anticipate or predict that the shorts will begin to rise really quickly, the longs begin to fall really quickly, and actually when you get the cross,
Mm.
that will be where the higher low is, and
Mm.
potentially you could see a move up. But this is the thing is like this is what most people make a mistake with indicators. They use an indicator and they think it has to be 100% all the time, and then it doesn't work one time, and then they rule it out forever. That's ridiculous. Like no indicator or anything is going to have a 100% hit rate. I'm just saying that looking at the longer shorts over, I don't know, fucking 10 years,
Yeah.
I've managed to be able to get a general idea of where the market's going to go
Mm.
in a better way than most people because a lot of the time when you see the market really ripping, you do see most people just shorting into it, like we saw when the Gareth Soloway days where everyone was just shorting. The price just kept going against them.
Mm.
So I would say that most of the time, if you're really over long, you're going to go up. If you're really over short, you're going to go down. That's usually the end of the move. But actually, at the start of a move, people can get it right. It's still risky, and you got to remember that there's still if it's 65% long, you still got 35% short. So there's still people losing that trade.
Mm.
It's just the ratio between the two. And I would say when you're getting these crosses, that's when I'm really interested in looking at stuff because I'm like, ooh, the last two times you got a cross, the market's gone the opposite direction of when the cross happened. And I would say right now, this is probably because obviously you got to remember it's nuanced this fucking game. Like not every situation or scenario is the same. So I would say for this one specifically, it is a good time to get long. Some people are right, but now you can see them coming off. Let's see where the higher low is. I'm going to be interested in getting into a trade there because that's where we want to get into our trades anyway.
Mm.
Is when we're looking for the confirmation of the move. But yeah, no, if you use long to short, I just think long to short's a very good tool, and I've used it for many years. But I'm not gonna rule out an indicator that's worked extremely well for like say it works really well for a year, and it stops working for 3 months. I'm not gonna rule it out forever. I'm still gonna use it in my analysis to see are there specific, you know, are you seeing trends and patterns happening with it? And we know that a lot of the time, fucking retail get it wrong, so it's nice to have it there. But yeah, just don't make that mistake of because that's what people do with indicators. Like, oh yeah, this is 100% hit rate, and then it doesn't work for a bit, and then they rule it out completely. You
Yeah.
should just use it in confluence of the stuff as well, for sure. You can't just be fucking buying and selling one indicator. I would just say if you only had one. The thing is, when you do this, this is like essentially critical thinking. If you think to yourself, if I can only use one indicator, what would I choose? That puts you into a situation where you have to think about that scenario in a deeper way. So
Mm.
you're going down the rabbit hole of like, what do I really need? So it's like, for instance, when people, I don't know, when the Marines go and fight in a jungle, like they need to fucking think about what they really need. So they essentially, that's why you see such advanced equipment on certain things. You need certain things which are going to keep you alive. It's the same thing with trading. If you just really think about what do I really need, and I can only think of one thing, I would say that the long to short ratio is one of those indicators, probably in the top three, where if I could only have like one indicator, it would be up in the runnings
Mm.
because it's very good for long periods of time.
So what you said is kind of just described here quite well on the chart, where we did have a break of structure here on the hourly. We had a bit of a lower low, bang, and then the long start to come in. So this is where we had the flip right here, and then we had the big dump straight after. So yeah, that would kind of like support your
I literally
theory that the
mentioned this on
crosses.
my Twitter.
Hmm.
But if you go back to the one before it as well, so go back even further, and then you can see this one. When the red line, this literally the one just before it. So when the shorts overtook longs, you can see the price. But
Right
you got to
there.
remember, like at the beginning of this move as well. Like think about it, the beginning of this move. So okay, you're looking at retail at the top, yeah. So you can see how when it was like 70% long, there was a lot of dudes actually who got into a good position there. You can see.
Yeah,
Look,
right there.
what I'm what I'm beginning to see as a pattern is that
But they tapered
it's
off.
not just where they are. Yeah, yeah, it's the direction. So
Hmm.
like when the direction of the longs begins to fall and shorts begins to rise, that's actually in itself a warning for potentially a flip. Because you got to remember, again, just because 65% of people are long doesn't mean there's not some fuel. Do you know what I mean? Like there's still shorts out there
Hmm.
which are going to get hit, and you can actually see pretty. I don't know. I'm beginning to see a lot more is that actually at the very beginning there a lot of people do get it right, but they might be underwater from previous longs. So do you know what I'm saying? So what you have to remember as well is that these guys who are accumulating longs, they might just be underwater from their long, which was a little bit higher because usually the price is coming down when you're coming into it.
And when it
So
does
it's quite
that
interesting.
first pop, like that's when they taper off their longs, and then yeah, they have to sell, and then
Exactly.
yeah, and then you get the high low, and
I
then you
was
get the
saying this a
cross.
few
Yeah,
years ago. Yeah, yeah, because they're then coming out. Yeah,
yeah,
basically what they're doing is the people who are underwater on their long,
mm,
now they're trying to exit out. That
mm.
then pushes it down, and then the shorts begin to catch up. So it's kind of like it's not exactly that, especially when there's a flip of direction.
Because they could have started longing all the way up
It's a flip
here
of direction,
and
but
basically been long from here,
exactly,
and then this is when they start to
mm,
taper off, and then bang, you get the high low, and then everyone starts shorting, and yeah,
exactly.
bang, yeah,
And
oh yeah,
also, this does make a little bit more sense because it's not like you have to remember that there is a time aspect to this. A lot of people think like, oh, if it's 70% short, it has to go up now. It takes time for people to either sell out, reposition, and essentially keep flip flopping the wrong way, and that's what you usually see. Look at
mm-hmm.
those shorts popping in when it flipped. Then we rallied up, then we came back down again, and then the longs came back in, and then we went down. But again, this is not going to work every time. I've been in markets before where everyone's been long and the price has still gone up. Like I've seen, like, do you remember the first bull market? Which I don't know if I was in one before that as well, but we didn't really have the data back then. But there was one market, the first big one when Bitcoin went from about, it was during like the COVID horrible summer where it went flat,
Mm.
and then we had the big push up into like the 2021 kind of period. Everyone was fucking long. I
Yeah,
remember it was like 75% long the whole way up.
mm.
Everyone was long for ages. Everyone was making money. Do you remember? Everybody was making
Yeah,
money.
yeah, yeah.
Then
That was easy
we
mode,
saw the
man.
flip. Mm. So there will be easy mode. So you have to be careful with indicators in general. Don't just like die on the hill with one indicator, and don't then forget that indicators really do have to be consistent with the environment. And some indicators, yeah, in some markets scenarios won't work. Like we saw in the big bull market of 2020, 21, 22. Like everyone was long, and it was because we had huge amounts of. Because you got to remember who you're fighting. That was when institutions were stepping in. So we just saw the price rallying. Everyone was buying. The price was rising, but everyone was long, and then everyone got wrecked later.
Mm. Mm, 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 mm. I think
So it's a
that's
bit more
also
complicated than that.
it's
But
quite good to use
the
that
last
in.
3 months, I've really.
Yeah, go on.
Yep, go on.
I was gonna say
We're basically like a little mirror image of each other.
I was just gonna say that.
Go on, go on, go on. We're so British. No, 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 don't worry,
No,
don't worry.
you
You
go.
go on. No, you go
You
on.
go,
You go
sir.
on.
Your turn. No, I
Okay,
was
sir.
gonna say
No, no, don't mind me.
yeah. Also, potentially like using this as along with the max pain. So if we're looking at short max pain, if we do come and rip that short max pain, then it's also gonna even out a little bit more as well in the same time, and then we
Mm.
get the higher low, and then yeah, you get the flip, and then everyone starts to, then it
I've
exacerbates the
got a
move
feeling on
like
this
either way.
one.
Go on.
I got a feeling on this one. Since we got the nuke, longs have been rallying. The price has been falling.
Mm,
Everyone who is long is underwater. They're going to start exiting. That's what they're doing now. Shorts are beginning to catch up. I reckon we get a higher low, and then that will be where the cross happens, and we'll probably rip up. Everyone's like, "Oh, doomsday." I know a few guys in the community are a bit doomsday right now. Look, I don't see any reason why this can't continue up. Like we're above the 200 day. The structure isn't broken. We're still above 100. We're actually at 111 now, I think, maybe 110.
mm,
Um, we've got the volume still not tapering off massively on higher time frames, and also like other indicators like CBBI is not there. Doesn't mean it has to go there, but I would think that we're probably going to rip. And I would say all these altcoin dudes who've been absolutely obliterated are probably going to say, "Oh fuck it, put the last of my money into Bitcoin," and then that might even mean Bitcoin escapes. Oh, let's just say decouples away from alts even more. But I've
mm,
been saying that for like two fucking years. This whole cycle, I've been like, just get into Bitcoin first. We don't know
mm,
where this is going to go. Unfortunately, for a lot of altcoin dudes, it was a bit of a sour exit
mm.
because they essentially got licked. But I don't know, man. There'll be a new class of people coming in. There's a lot of dudes who were in the community, well, just in crypto in general, who probably traded altcoins very successfully for many years, and now they probably won't come back, which is
Mm.
it's good and bad, but obviously it's bad for them personally. It means a lot of like a lot of leverage has been flushed out. There will be new participants, but what we might find is those participants might be slightly different. They might be like let's just say I don't like to say institutional grade anymore because it's a bit like nah, no one's really institutional grade, and most of the institutions get it wrong as well. It's just like maybe a more sophisticated traders coming in and
Mm.
actually probably more hodl stuff. So,
Yeah, yeah, I think Adrian was also talking about that, where potentially like the altcoins you want to look at are the altcoins that kind of didn't really do that bad in that big liquidation event, because you're going to want to look for things that institutions or more things are going to be more likely to one get an ETF or have more sustained like volume or support. So things like SUI, which like wicked all the way
Yeah,
down
I
to the lows,
completely
are going to
agree.
be like you were saying, it's like no institution is going to look at that and be like, let's get that an ETF. But maybe like Sol, ETH, stuff
Let's
like
hold
that
that for
is,
5 years.
yeah, yeah.
It's a tough one, and I think any altcoin that did get an ETF in the last year, actually did perform a bit better. Like Solana hardly got hit. We know that Bitcoin's got massive ETFs already.
Mm,
Solana's got an ETF. Any coin that really had a big ETF didn't fall as much, and that's just probably due to the fact that less of the whole total market is levered.
mm,
Just because an ETF you're not using leverage. And a lot of people get ETFs wrong as well. So like ETFs isn't even ETFs are essentially like you could call it long-term fixed positions. Like it's when you buy an ETF, buy and sell an ETF, you have a primary and secondary market. When the ETF actually buys the Bitcoin, it goes into essentially like cold storage, most of it anyway.
mm,
You're just trading on the basis of what the price of the ETF is, which is not the Bitcoin's not even moving. You're just buying the ETF ticker, for instance, IBIT. So but IBIT going up and down can influence the price of Bitcoin on the spot, but it's just not completely connected. Like massively sometimes, especially in moments of like significant fear or greed.
mm,
So it's kind of the same with Bitcoin. The derivatives market still rules the roost, but derivatives can get ahead of themselves, and the spot there probably will be a day where they'll really begin to decouple, where the Bitcoin spot price is like completely different, and then the derivatives price is like actually maybe higher or lower depending, and that's going to be really interesting because you're going to get that kind of same gold synergy, and then people will. Well, when you have a big gold investor, for instance, let's say that fucking moron, I can't remember his name, Peter Schiff,
mm,
and like Mike Maloney, for instance, they literally own bullion and they only trade the bullion because they actually have exchanges that trade buy and sell bullion gold, and you have a massive difference in the price. Like if
mm,
you want to go buy paper, you can actually be trading at like 20%, and also you have to remember there's a huge premium as well. So like if you want to buy spot, some exchanges will fuck you in the gold market. Have you seen all these people queuing up to buy gold?
mm,
Like these guys are getting wrecked because they're going and buying bullion and they're probably paying like 8 to 15% to get the physical
mm.
extra, just because it's more finite than the paper. So it's going to be really interesting to see how Bitcoin changes over the years. But I do think it's going to closely begin to replicate gold. Um, but then we do have the quite interesting dynamic of Bitcoin where it's like you don't actually have a physical weight to it. And it is super. There'll probably be some mental exchange in the future, which will just have like instant liquidity, and you will be able to trade spot quite easily, and it will use some sort of channel system.
Mm.
I think Lightning Network's really underutilized. I still do think it's good, but it's people just don't use it anymore. Well, they don't use it at all in comparison to like what people do with the main chain.
Yeah,
But we'll see it change.
yeah, we'll definitely see it like improve, and especially when accessibility comes into the market a little bit more, we're going to see a lot of new participants that are probably buying a lot of gold now, and then like they're going to be like, oh, let me just buy some Bitcoin as well, or a little percentage, let's say.
Yeah, the next gold bear market, man, is going to be nice. I don't think gold's gonna. The purchasing power is now the same as 2011, so that's a good sign. That means if you were buying gold to hedge against inflation, you actually kind of did,
Yeah.
but you only got back to square. You only got back to square even at 2011, so you haven't really made any money. Like if you bought gold in 2011, you know, at $1,800 or whatever it was, you haven't actually made any money until today. And actually, you haven't even made any money yet either, because it's still only at the 2011 levels. So you've just essentially done what gold does. Everyone thinks that gold beats inflation. It's not actually true. Gold doesn't beat inflation. Gold is just the accounting tool for what the inflation rate actually is. The price of gold rising is you seeing how much government's printed. the price moving of gold is you actually seeing what the true inflation rate is, because it just doesn't accounting for US dollars. There are some scenarios where gold can suddenly beat inflation, but really gold is like the marker of inflation. So all these people who come out, like I saw this guy called Rob, Rob Moore. Can't remember his. I saw a video of him, and my mate Alex is into real estate, and he's a big real estate guy, and he's like, yeah, you got to buy gold to beat inflation. It makes no sense. It doesn't beat inflation. It can't beat inflation. It just does an accounting eventually for inflation, and then gold going up in price is the marker, or let's just say it's the way of you articulating. Okay, now gold's risen. That's what the inflation rate was, because you're only back to 2011. That's
Yeah,
why a lot
I'd
of
say
there's a great quote which says, "Gold doesn't make you rich; it just doesn't make you poor."
yeah, exactly. I was gonna say something similar to that. I wouldn't say it beats inflation, but it kind of just lets you tread the water, and then I guess Bitcoin would be the beater of inflation for me.
It can't beat inflation, man. It will beat inflation like within a few years of a specific spike, but it can't really, because the whole premise of US dollars and fiat currency is on the basis of what, it was backed by gold, and it's more of a defensive tool, and it hasn't got a growth story as well. It's not like gold's always been dampened over the years by other asset classes, so it's not Bitcoin is beating inflation because it's growing. It has a growth story to it because it's small, but gold's already massive. And like we know that like the biggest governments in the world have fucking tens of thousands of tons of the stuff. Yeah, no, gold's great. It's a very good defensive mechanism. But anyone thinks they're getting rich right now on gold, and it's even funnier as well that you got all these dudes buying gold and queuing up for it, thinking that they're going to make money, but they're now kind of the exit of what's going to happen. They're actually buying because it's only gone to 2011 levels, so they haven't made any fucking money. But that's interesting in itself. That $5,000 gold is nothing in. It's not anything different to $1,800 gold. It's the same purchasing power. But that just goes to show that that is the marker of that's how much new currency has been printed. So what you could really take down is probably about 2x. So 2.5x is now really the circulating supply. So that's how much they printed. 2.5 times more money since 2011 right now. But if it goes to $10,000, then you can have an argument saying maybe it's 5 times more. But then it'll probably come back anyway.
Yeah, a lot of people are actually starting
But
to buy
gold's going to
gold.
be all that shit anyway. I mean, sorry, Bitcoin.
Yeah, yeah. As you said, everyone had money when that happened. Everyone is
But yeah,
broke
I would
now.
just
So I think he's talking about last cycle when we were like everyone was completely long. Everyone had money back then. Everyone's broke now. So glad I went into hyper not Bitcoin from Jan to April. Selective alt season. We don't have any money to pump 10 mil coins. There is no QE. Well, it's kind of like stealth QE. Well, it's more.
there's always going to be one alt, man. There's always going to be one altcoin.
Yeah.
Say again.
I feel like we haven't
But
had
another thing
proper
people don't
QE,
get
but
is
we
like
will
one
soon.
altcoin can like if you buy, there's a bit of a lag here. I don't. There's a bit of a delay, but if you're buying, like, say you literally own the stock market, the SP 500, there's always going to be one company out of 5,000 companies on the Russell that will beat the stock market, because some companies will grow faster than the stock market because they're small and they're growing. So there's always going to be one or two altcoins that are going to beat Bitcoin, because obviously there's a whole other market. It's the altcoin market. So of course you're going to have that. But what the problem is that for you to consistently choose the right altcoins out of millions of them, which are going to beat Bitcoin, it's just very, very difficult to do that consistently. So I would rather say have most of it in Bitcoin, let that grow, and then yes, have like 25% of your higher risk of stuff, which is buying alts. And we've all done really well on alts. Like, I did fucking well on Matic. Like, Matic was one of my biggest wins ever. I put 50 grand into fucking Matic at 4 cents. Like, Bitcoin didn't, in that specific cycle, that trade went up to like $2.5 million. Like, I didn't, that Bitcoin in the same period of time went from 10K to 70. Still pretty good, but it's not fucking 4 cents to $2.50. So, like, you're always going to have the altcoin which wins, but you have to take into account that the altcoin might flip down 98% or might go to zero in 3 minutes. So, like, yeah, you gotta be careful, man. It's crazy, these alts, but they're sick. I love alt. The altcoin market's amazing, but we did realize recently that the altcoin market is so much smaller and so much less mature and hasn't even got deep market pools or anything like that. There's nothing to stop it. I'm actually for that to a degree. I don't like the way that the stock market has loads of safeguards and deep liquidity pools, and there are specific entities that have control. They can have market breakers. They can stop the market if they want. All of that stuff actually is not good. But if you don't have those things, things can happen which are crazy, and you can wipe out a fuckload of money in a very short period of time. But eventually, long term, let's just say like the altcoin market, which is less regulated, and let's just say governments and institutions can't regulate it the way they want to, what they do with the stock market. What will happen is over longer periods of time, you'll just create a much more complex, weathered participant. Because like the only way you learn is when you lose. So like the altcoin market will create in the long run a more, like, let's just say, weathered individual who is a better investor as a result of that. The unfortunate thing is that on that journey to getting hard and weathered, there will be some people who will lose everything and not come back. But that's like the same as the Wild West. That's why you had all these fucking cowboys who are tough as nails doing all their shit. They were tough guys, but a lot of them got blasted along the way. But it did make it for a strong society as a whole. You can't have it both ways. You can't have a nice, easy safety net society and then have strong, very, very complex investors, because the journey to get to nice, easy safety net means you don't lose as much, which means you don't learn as much, which means you're not as good. So it's like any fucking businessman, isn't it? It's always a fucking business person who's come from the Bronx or they've lived in a council estate with nothing. Like that period of hardship is what actually makes you better. And then you see all these private school boys. Oh, hello, how are we? They're their safety net, but they end up losing all their father's money. When they're old. It's the same thing in the market.
Yeah. For sure. So, yeah, to round it all off, Bitcoin. I want to hold this weekly open. I want to hold this hourly structure that we just did put in. This sort of thing that we just kind of tested, this block here. I would like to hold this for more upside. We are coming up into a bit of resistance, starting at about, well, pretty much where we are, but also 113 to 114. We'll have to see some sort of reaction there. There is a decent amount of liquidity in the middle, but we also do have a dead zone right up at the top near the 786. So yeah, if we get up to like 121.5 and we're looking to potentially take a short, in the meantime, I might look for.
I reckon we get a little nuke, man. We're probably gonna get a little nuke now.
Yeah,
there'll be a little nukey. It's happening in real time right now. We can see the longs falling rapidly right now. Like literally, look at it. They're falling, and the shorts are going up. So let's just see where the price is when the longer short crosses. And I just have. This is not a prediction, like I said on that post. It's not a prediction. I'm just saying if these things play out, I think there's probably a really nice buy between here and the wick low, where risk to reward wise is probably likely going to be a higher low and continue. And I think a lot of dudes, I don't know, there's fuckloads of people in the community. I think Will has got pretty a bearish outlook. I spoke to him as well about it.
Yeah, me too.
But I don't know. I can't get on board with it yet. I need to see the 200-day get smashed. I need to see us at least below $100,000 for us to say, okay, maybe there is a chance we go into a bear market now. But nah, I don't see it right now. I think we probably actually do continue into the end of the year. And then we had the blow off top. But that big wick down is a kind of it's a marker. We know the price gets more volatile as it gets closer to a top, because you just get more erratic trading, don't you? People buying and selling, like, oh shit, shall I tell? And that you're just getting more and more heated.
Everyone's getting.
But I'll change my tune. Of course, brother. Of course. That's why you need to automate, and I think.
Yeah. I was gonna say automating.
Yeah, go on.
Is so key. But for me personally, I'm going to start to look to exit some of the market, especially when we get up to around this 786 pocket. I do think that there is potential for like wicks up past 130, maybe 135. Like I do think there is potential for a little bit of a blow off top. Just if you look at the amount of liquidations that are above. There's this dead zone here right up like 134, 135. There's also one like at 129. I do think there is potential that we could rip all this stuff, but for me, I would like to start to potentially like just take some profit and like take some risk off the table, like especially with like
Yeah, I'll head
Bitcoin,
short. I'll
ETH,
definitely
like
head
stuff
short
like
there.
that.
786, I'll head short.
Yeah, I'm talking about my spot though.
I'm already head short anyway. Yeah, okay, you're still so small. Okay. I
Mm.
did actually sell a load of BNB, so I got that hedge position, but I don't know, man. I'm thinking head short up there,
Yeah, for
but we
sure.
wiped out so many longs on the downside as well. Like fucking Ethereum's gonna come down a bit, but we wiped out so many longs. I don't think even these altcoins, which will probably end up ceasing to exist, I think they're all gonna have a big rally. All look like think about Sui. It's not
Yeah.
going down now. Like, there's nothing down there. There's no incentive for it to go down. It will probably go up, and then it will probably end up being the big sell-off,
Mm.
where like everyone says, actually now I'm kind of let's exit and then not go back. But
Mm.
Bitcoin, we'll see. If we lose the low wick, brother, 107, 100K. If we lose that, we go below the 200-day moving average. Then we'll fuck around between basically 100,000 to 74K is the next like significant range bound part. If we'll probably end up spending months in there, and if we do go into that region, then we come back up into the 100K area and we start just seeing sell, 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 and then we just see everyone trying to long and it's just going against them. Then yeah, I would say fuck it. We might go into a bear market,
Mm.
and that will be pretty. I actually don't. Like I said, I don't care about whether it's bull or bear, but I would say also I do think we're going to have a dampened cycle, so it will probably only be 60% down instead of 70. We've seen that every single cycle, and eventually it'll get very goldy.
Mm. That's
Where it
why I
might,
think.
we're just, and also we're going to change. The whole thing's going to fucking change soon as well. Like this whole 4 year cycle thing, it's not going to continue forever. There's going to be a big break, and it's going to a lot of that's where the big next transition of let's say I don't know. It's just going to be a big transition of coins moving around to different wallets, and there's going to be a lot of people who are going to get their strategies that worked for the last 10 years in Bitcoin aren't going to work, but they're not going to work for so long that they are going to lose everything, and that's going to be really tough. So play defensive
Mm.
because this I don't think it's a time to be really risk on with most of the crypto stuff right now, especially alts. So I'd say it's actually time to think defensively. Take stuff off exchanges, have a big spot portfolio, maybe be yielding it a small amount in an institution that you really can trust, something that's regulated, something that's got some good shit, but not all of it, because then you might get a government one day knocking on your door and taking it. So always have some ledger, always have some Trezor, always have some low risk shit, because it's there's probably going to be a long period of time where it's going to do something different. I would actually probably say it will probably be like down, but it will be like so slowly down and sideways that it's just like the most unbelievably boring thing for maybe like it might even do like a 10-year one. Like it might if that and that's gonna fucking change the whole thing. Like we might just get a slow down but like sideways for many years. I look at gold. It does that the whole fucking time. 2011 to where we are today, which is almost 15 years. For 13 years of that, it was down and kind of shit and sideways. And yeah, you can get the chart up. I can see it on your screen. So yeah, this is a huge blow up top. But since 2011, you see that sideways bit where it just went like literally flat and boring and all that kind of crap. Yeah, not fun for most people. Yeah, that fucking thing. That was a long time, brother.
Yeah, that's a big round bottom as well. Big round
Yeah,
bottom.
but it's a long enough round bottom for nobody to know it's a round bottom during it happening. Do you
Yeah.
know? So it's such a long. This is like literally 10 years. So like it's such a long time that
Mm.
when it's happening, no one sees it.
Yeah.
It's the same with most macro investing stuff. Like we're gonna get something like this, and then I think we'll do. It might be the next market cycle, bro, because Bitcoin's is climbing so quickly. There's definitely going to be some other opportunities in other areas. We might even have a new asset class created in the next 10 years as well. There might be some new fucking AI thing which happens and people will look at that.
Mm. Yeah.
We'll see.
Yeah. So, but with me and Bitcoin, or like with me in the market in general, like it's not like I don't think that we could do a little bit higher, but I feel like it's almost just like the risk to reward is like, yeah, I could see Bitcoin underneath 60K in the future. So I'm gonna just start to take some profit, especially when we get up to that like 786. It just makes sense to me now that especially we've had those like few weekly candles, we're starting to, look a little bit meh. But I'm gonna wait patiently
It's
to
a
be
weird
fair.
one though as well, man.
It is. It is.
Thing is, I was always going to exit. I was always going to exit into gold. My plan was to exit my, because obviously I sell 25% of my spot as well as my bot selling. So I do sell some Bitcoin. I
Mm.
usually sell altcoins, but I was going to exit into gold. But gold is, it's just a difficult one right now. Yes, it could go to 10,000. Wherever it goes is the marker of how much government's really printed. Because you can look at M1, you can actually look at M0, M1, M2, M3, and M4. Okay? And you can get a whole different scope of all these different things. The reason everyone uses M2 is because the synergy between the base currency and the banknotes, as well as some liquid credit. You wouldn't use M1 because it's not liquid enough. M0 is just base, so we know that the world's not just base. There's obviously digital as well. And then M4, which I've been looking at quite a lot, is the Bank of England standard. But again, it's taking into account credit, which is literally not moving. So the government has always printed more money. They got reserves of cash, which is like a digital number, but it's not circulating. So you have to try and look at like what's actually in the system itself. You can't. It's like I don't know. It's kind of an analogy would be like if you have blood circling around your body in a hospital, but you have like a reserve bag of blood, you wouldn't account that for actually being circulation in your body. Is that's like not there yet. But a lot of these metrics will say, well, that's money, so that must be how you do inflation adjusted. But that's why M2 is quite good because it's not even perfect though. Because the thing is about this whole situation is that it's very difficult to know exactly what the US government alone has done, and then take into account all other fiat currencies and the forex market. It's like near on impossible to know exactly how much currency there is. So the gold will be the marker of how much did they really print, how much did it how much over exuberance the market did. But if it went somewhere like $10,000, which I think is really unlikely, but if it did, that that just goes to show how much is probably sloshing around the system. But then there'll be a massive, massive bear market for gold. And we'll probably come back down to its 2011 highs. But I don't even look at the gold price anymore. I just look at inflation adjusted. I just don't see any value in looking at the normal price because it doesn't represent what it is in any way.
Let's see what Pax G's doing. Yeah, Pax G's just blasting it off. Look at those wicks.
Actually, he's doing like this mad shit. It's cool. It's a cool fucking thing to trade for sure because you can get it on the crypto exchanges. But yeah, I'm probably going to set one up. I'm actually because I basically we're launching a new bot project or a new bot part of the whole business. You're going to see it very soon. What I'm going to do is I'm probably just going to like actually set up through our system because obviously at the moment I have my own external systems. But what I'll do is I'll actually set up a bot on something like PaxG through the actual MDX Algo new bot system we're going to create, and it's a synergy between the settings come from MDX Algo. It changes your chart on TradingView. You then have the settings which you want, which you connect to Wonder Trading. And I'll probably actually do that process with the Eggle, so I then can actually relay this across. Because obviously I've got all of the other systems I use.
Yeah.
But I think now it's getting to the point now where if we can get this right, what we're launching, is getting to the point now where automation should be pretty much easily accessible, like easy enough, because it's still really tough for someone who's only been trading for a year or so, because you haven't got really the access to be able to look at the longer. So you can't look at 3 years of backtested data. It's not easy to change it when it's running. You have to sit there and monitor them the whole time because they change and you have to adapt with them. But we'll see, man. It's going to come out probably like this week or next week, like the first alpha. And obviously anyone who's got an account will see it, but it will probably evolve and change.
Really, really cool. Really, really cool. A lot of people are looking for that sort
You're
of
gonna
stuff
love
as
it,
well.
bro.
Yeah, I'm definitely gonna love it because
Mate, the
I'm
whole
not really that
company's changing, bro.
automated.
Honestly, like, bro, the company. I already had a meet. I got a meeting in a minute anyway. So the kind of the internal conversation is this: like, what should we actually really be promoting? And me, Viking, anyone who even other people in the community like the Eggle, Ingo, anyone who's actually like doing really well is automating. So as a company, we should try and make sure that that's actually probably the first thing we we promote. So I think the company will, the indicators might even slide to the back of the queue in terms of what we will call our flagship product. And then the first thing will be bots. And it's like, we're gonna have Algo Master as an indicator, but then we have a new Algo Master indicator, which is just specifically made for bots. So it's going to be completely ripped out, and all it does is all the same shit that Algo Master does, but we get rid of like all the subjective tools, for instance, like the moving averages and the quarterly opens and all that kind of stuff. And we just make it so it's only built to program, and then you click it, you get the settings, and you can just run Algo Master through Wonder Trading. The next step for MDX Algo would be to have it so we can have our own way that you connect MDX Algo with the settings to your exchange. But the problem which comes with that, which obviously a few of my friends have been building a company very similar to this, the issue you have with that is you have to then KYC everyone. You have to have massive regulations. You probably wouldn't be able to even do it in the United Kingdom with the right documentation, etc. So you have to do it through. You have to go through Cayman, or you have to go through Panama, or you have to go through this. You have to KYC everyone. Then you have the third-party liability risk. So it's very difficult. But let's just say you put out a marketing campaign, and then you maybe said something you shouldn't, and then someone lost money, and then they sued you. It just gets really complicated. And I have a few friends who are doing that right now. They've just done the whole process. And I would say, for the reward of doing it, for the risk of doing it, it's not impossible. But right now, it's better to create the tools for other people to go and do it themselves. So then you get rid of all the third-party risk. And I don't want to KYC. I'd have to KYC everyone in the business if we did it, which would just be fucking
Can you not do
gay.
like a sort of thing like Alpha Exchange though? Was it just like that's not possible?
Yeah. Well, Alpha Exchange is kind of different because I don't hold customer funds, and the regulation part of it is through Singapore, so it's kind of like a plug and connect play into another regulatory body, and then the trading is done on those order books. But the great thing about a DEX is that you don't actually, well, it might change in the future, but right now there's no like legal standpoint to say that if someone connects to your front end, well, there's no way of knowing the customer anyway because you don't even have any data on the customer. We don't take an email. We don't take a phone number. We don't need to know our customer because we don't know our customer. That might change in the future though. Where they say, oh, well, a wallet is connected to this, and then you might have to do KYC through MetaMask or some gay shit. I don't think it's going to happen for a long time though because there's so many gray areas. So I don't have to KYC with Alpha. But if it was centralized, then yeah, I would.
Okay.
If I take your email, then I got to do it.
Yeah.
But I don't. And also, it's quite clever the way it works with Apollo and everything in Singapore. But with the MDX Algo, it would be completely different because what we would be doing is you would go and put money into your Bybit account, your Binance account, whatever it is. You would then connect the API from Bybit to MDX Algo, and then our systems, whether it's TradingView or our internal system, the signal to buy and sell would come from MDX Algo. So the problem is that we take the API, we then log it, we then have you as an account, and then those three things mean that we need to know the customer because where is your money or who are you? Like they need to then know that they need to then verify through the system that you're not like some sort of fucking drug dealer or money laundering or this gay shit, which has nothing to do with us, but that's just the rules, man. That's what it's gay.
Yeah, no, I'm really excited about that bot thing though, because even back when I used to do like a lot,
Mate, it's gonna be sick. We've got a really good team on it.
Yeah, when I used to do a lot of the sales calls, a lot of people used to just like a lot of people want the easy mode, like they want to just jump in, get some bots running, like be profitable, calm, like they don't want to spend like 2-3 years like actually learning how to trade. And anyway, like you said, like it's all gonna become like that in the future anyway, so. Definitely making that more accessible and streamlining it is probably.
Well, it makes sense, man.
It does make so much sense. So much because even
just have it so you have some automated and some manual because everyone's going to manual trade as well. Like manual trading is obviously where you get the rush and the fix, and it's you're in the market and the thing is about manual trading is that people believe that they can take more credit for it. The issue is that when you take credit for your wins, it means you need to take credit for your losses, but people struggle with that. But I know manual trading is not going anywhere.
Yeah.
But I'm just saying that if we're going to be like true to what we speak as a company, we probably do need to say, well, actually the highest probability of making money is automation. So if we don't make that the main thing we do, then we're kind of not true to the whole company motto, which is if you're not profitable, make you profitable. If you're profitable, make you more profitable. Massive tagline, but that's it. Profitability, baby.
I think a lot of people are
We'll see
looking
how
for
it is. I got a really good team on
anyway.
it. Yeah, it's going to be a massive experiment when the alpha comes out. And obviously, all you guys will have access to it. Anyone who's got a subscription will have access to it. So, yeah, essentially. And the cool thing is now with this product, I will go through the process of using it directly with Wonder Trading as well. Because I always like skip that step. And now I'm just going to actually use the whole thing myself for all of my stuff, which will be much better for the marketing. Because obviously, with my HODL bot and everything, it's all separate. But people can copy it. I would rather have it so it's actually really simple. Like I trade my HODL bot on exchanges, but I just use my own internal system, so it's not hard to do it. You just have to fire a signal from TradingView to your exchange directly. But I would say that now to do this, do it through Wonder Trading. Yeah, we've also been in discussions with Wonder Trading about a whole lot of stuff as well. So yeah, if we could, it'd be cool if I could build the whole Wonder Trading thing as well. But then you just got to start from scratch on a business which is already there. It might happen in the future, but we'll see. For now, fuck it. It's to be honest, what's more important is being able to see all of the back-tested results from Algo Master for like years and years and years. But we also have a really cool thing where we have a guy who actually is really profitable with our bots already, who had mentorship. He's now a part of the team. None of you guys know him yet, but you will probably. And what he will do actively is create a leaderboard of the settings that are the best to use. So it's like it's going to be a synergy between you have all the access to back-tested results, but also we have someone constantly working and finding the settings that work. And then there'll be a leaderboard and it will show like which bots are running the best, and then you can just pick and choose those settings because they're going to be doing the settings in it. So it's still some manual input, but it's much better than just throwing you in the mix and you having to back test and change all the settings yourself
and then going get
to
all
find
your
out what
APIs
works.
and get on what exchange, whatever you can handle and stuff like that. Yeah, no, I'm actually really excited for that as well because it was quite difficult to. Like I looked into it, like it must have been a year ago or something, but because the UK is so restrictive, they're actually getting a little bit better, the UK, but they're so restrictive on the exchanges and stuff that there was just no accessibility for me. I guess before Hyperliquid, but yeah, it's just a bit difficult over there.
No, Bybit's coming back to the UK, so they'll in 3 weeks Bybit's back in England, so that's great for a lot of people. They told me not to say anything, but like it's chill. This is my main community, but they're coming back to the UK, so that's going to open up a lot of doors for like just fucking English people. They really struggle to use. A lot of them use Alpha at the moment, but yeah, Dexes come with their own issues as well.
Yeah, I mean probably the Wix on
All right, bro.
altcoins were ridiculous.
Fuck it, I'm gonna jump on the call.
All right.
Yeah, go on.
No worries. See you later, bro. Have a good day and yeah, keep going. Sounded really good.
I'll see you on stream tonight. I'll stream at 7:30 tonight every day, every Wednesday. I mean, every fucking Monday when I'm out.
All right, sweet. Sounds good, mate. Give men fish. Why are people so lazy? Yeah, I mean, people are lazy, but it's also like automation is probably one of the things that is going to get the most growth in the future and is going to do the best. So it's definitely something that we should all lean into and make it a little bit more accessible for the community. Even people like us, like it's nice if it can be a little bit more streamlined and more accessible for us, just for simplicity reasons. But yeah. We didn't really do that much charting today, but I mean it's okay. Yo, what's up?
What up, Jackie boy?
Well, Bybit coming back to the UK doesn't mean features. Yeah, I mean, I was gonna say that, but I think it's kind of obvious that futures is not really gonna be that intact if it does come back. It's gonna be more like spot.
And yeah, I do agree with you on like the botting thing. It'll be really cool for us, but as a mentor that's also set up a bunch of students with bot stuff, or my mentor that's done all that. The number of students that don't understand risk and other things too, that like, okay, so I'm just going to put $10,000 into this altcoin bot and let it run. And that's going to make that a lot easier. Now, I'm excited about it for like me, you, Eggle, like the ones that like know how to trade. But my mind can't get off of like the worry of like teaching a man to fish, he'll eat forever. You give a man a fish, he'll eat for a day. Like I like the streamline of it, but I feel like if you get too streamlined, you're still just gonna get people that get absolutely fucking wrecked.
I mean, yeah, you're probably gonna get
But
people who get wrecked.
there's a fine line on both sides. So
Yeah, I mean, if there's one thing that we could do really well, probably at MDX Algo during the next bear market, if we are gonna go into a bear market for 2026, it's probably build out that automation side a little bit more and make it a lot more easier and accessible. Because then in the next bull market, everyone in the community is just gonna have fucking bots for days, and it's just gonna be sick. But yeah, we'll still be here having a bit of fun in the market.